Is CDIC a scam? Well, we're going to go through that today, and it's definitely not what you think. It's not what you've been told, and that's exactly what we're going to dig into today. From CDIC, we're going to look at their 2022 annual report that they recently just put out, which shows their financial position. So let's take a look at this thing. So 5-year financial and statistical summary, they just put this out for 2022. And what you can see here is provision for insurance losses. Now, what I hate about these things is essentially they've got it in millions here, for example. But then when you go down further, which we will do, they've got it in billions. And when they do this on balance sheets, it makes me just think you're trying to make it look like you've got more than you actually have. Because, I mean, if you put 1,900 million, people have to do math on that. And they're trying to make it esoteric for a reason. And it's 1.9 billion. I know. It's absolutely laughable when you think about the amount of deposits, which they actually have down here as well. So let's go take a look at this. So the total insured deposits right now is $1 trillion, okay? So you've got $1 trillion of deposits, says right there, 1,025, and we're talking in billions here because now we've changed from billions to millions. And you've got 1.9 billion in terms of the provisions for insurance losses, and you've got 7.284 billion in cash and cash assets. So if you add it all, maybe you got 10 billion total ballpark around that if you were to liquidate the whole thing. So obviously that is nowhere near $1 trillion, nowhere near $1 trillion. So how is your money insured? Now, this isn't a video saying just take all your cash out of the bank, everything's gonna go AWOL within the next couple of months. It's really a video to illustrate how your cash is really insured, because it is insured. It's just not insured in the way they're telling you. Of course, they're never going to come out and tell you it's being insured in the way it actually is. And what it's being insured by, and this is why I was a little bit late to the stream, is because it's insured by this, number one. So this is the Bank of Canada's assets and liabilities, and this is Government of Canada debt on its balance sheet. So you can see this chart has gone absolutely parabolic. Like, I mean, this is in 2008 when they took on some, and you can see it's just gone absolutely parabolic in 2020. And as the economy, as we said yesterday, as the economy gets more broken, essentially what happens is they have to spend more, the government has to spend more in order to prop up that economy. And they don't have that money through tax receipts and tax revenue. People don't want to pay higher taxes. So they get you in another way, which is by inflating these deficits. And when the government deficit spends, essentially what that does is it inflates the money supply. There are two real forms of where the money supply growth comes from. One is loans and debt, and the other is, well, I mean, it's still debt, but it's government deficit spending. It's government debt. And those are the way the money supply gets inflated. It's not so much that the Bank of Canada is directly printing those notes. It's really actually done via the commercial banking system, like RBC, TD, all those different things. And another thing that is insuring your cash is this. It's Canada's government debt. I mean, you want to know what's insuring your cash? It's this. It's government debt. And, you know, it's kind of insane when you think about it, because, you know, this CDIC, with the amount of money that they're holding on their balance sheet, if we go back to it, that 1.9 billion, you are really talking about just a token amount. I mean, it's kind of almost a pointless institution in a way. And in future videos, we're going to go into bailins. I know a lot of people have asked me about bailins. Believe me, it's something I want to get right if I do a video on it. I don't want to give out any false information. And again, like I said yesterday, the only perfect word for this is esoteric, because all the data, all the papers that they put out about it are hard to understand. They're not meant for us to understand it. So it kind of, and I want to understand it right when you're talking about bailins of banks. And I think a lot of people actually have it wrong in the way they think a bailin works. It won't be your deposits that get crushed and bailed in. It will actually be investors that lose out. Investors in the bank will be liquidated essentially, and all the investors will lose their money. But what people don't understand about that, they might think, yippee, like my deposits are safe. But what people don't understand is that comes with a huge amount of unintended consequences. Just think about it for the Canadian dollar. Now this chart is gold to the Canadian dollar, and you can see it's near all-time high. You know, essentially we were near the all-time high last year. We're up there again. It's probably going to come back down if the financial markets start to crash. It will come back down as gold is liquidated essentially. But then as that happens, this goes up. You essentially have the US dollar, well, not this goes up, it goes down. You essentially have the Canadian dollar, US dollar. If you look at this, it broke below this trend line a while ago. It's come up to test it, and it looks like it may fail to test it and break below again. So you had it touch like 68 cents in 2020. So that's the low mark for the Canadian dollar. But long term, I think the DXY is going up, and I think the Canadian dollar is going down. And I think at some point you're going to see gold rising. You're going to see also the US dollar rising at the same time, because typically they're inversely correlated when you look at these financial things. So basically, government debt, obviously, again, I want to come back to this. The fact the yield curve is just so inverted right now. I mean, you've got the 2-year at nearly 4%, and then if you go down to the 30-year, it's at 3.1%. So you're talking about 85 basis points of inversion. And as we said yesterday, when you're talking about yield curve inversion, you are talking about people in the bond market, large pools of money, insider information that we don't have, but we can see via the bond market and yield curve inversion that they are betting that rates are going to come down. They are betting that there's going to be some sort of economic crisis in the future to cause that. This is why the yield curve is so predictive. But to people's point, what they wonder about how their money is actually insured. I mean, it's not insured through CDIC. It's insured through the federal money printer. It's insured through the Bank of Canada, because the Bank of Canada is not a separate entity. It's a crown corporation, and it is not separate at all. We've seen that throughout 2020. I think one of the politicians pointed it out at one point, that the amount of bonds that the Bank of Canada was purchasing was exactly the same as the amount of debt the government was spending at that time. I mean, it wasn't coincidence that happened. We all know that this is all being done behind the scenes, and this is all being talked about. And you know, I spoke to a guy just a couple of days ago through this channel, and he lives in Kingston, Ontario. And he said something which I thought was really, really good and really, really describes what's going on. You know, in Canada, when you think about the corruption, it's all behind the scenes. It's very insidious. Like you know it's there, but it's not so much in your face. When you're in places like Mexico and other places around the world, the corruption is more in your face. It's more right there. So you know how to avoid it, you can avoid it, and you can get away from it in those instances. But within Canada, it's very, very difficult. And not only that, because the public, most of them are completely asleep to what is going on, how corrupt the financial system really is, how they just want them in this hamster wheel of debt slavery for the rest of their life. And they'll never be happy. They'll always be chasing something financial after one thing after another, because that's what the government puts in front of them. And really, guys, you know, one thing that shocked me was the fact that so many people have seen that Move into Alberta campaign, which was a government campaign, and they've actually moved on the premise of that. Like, the propaganda has worked, and that shows you how easy it is for the government to just manipulate people and play on their weaknesses. Because yeah, don't get me wrong, I understand people want a cheaper lifestyle and stuff like that, but they're manipulating people because they're playing on their weaknesses. They're saying, okay, you have an expensive cost of living there, so let's play on that weakness. We know they don't like that, so let's play on that to get them here and manipulate them to do something, to move thousands of miles their whole entire life. It's just kind of crazy. And I think that's worth noting because it shows you just how powerful government propaganda is. But yeah, you want to ask where your money is insured. It's Canada's government debt. And if that goes up, then the value of the currency goes down. It might not go down on the FX market directly, but the value of what you're going to be able to purchase with it, because inflation is going to go up the more the government spends, because they're not producing anything, spending that money. All they're producing is the money itself and the debt. So when there's no goods and services behind that they're producing, that means inflation. That is essentially what inflation is when you really think about it. So that's really it. The CDIC thing, it's not more complicated than that. 1.9 billion, 10 billion if you want to add everything total on their balance sheet. I've linked it in the description so you can check it out. I think we're going to go into some of the banks and the amount of debt that they hold and cash and everything like that, so people can understand that, because then you'll understand how just that is just a tiny fraction of what the amount of banks have, as we even saw on them, $1 trillion. And then you've got to think of all the unintended consequences of all that money that isn't insured, that will get bailed in. And a bail-in, to me, from what I've read and understood, is just essentially CDIC taking over a bank, or the government taking over a bank. That's what it really is. That's what the mechanism really means. And it means all shareholders lose their money. And obviously there would be massive unintended consequences with that for things like the Canadian dollar, massive flight of capital out of the country. So anyway, thank you so much for watching. If you enjoyed this video, you might like this one here. You might also like this one here. I see the sun is rising behind me, so that means it's time to go. And I will see you in the next one, guys. Thank you so much for all your comments. I'll speak to you down in the comments. See you next time.